So we're getting, cuts across the Asian markets. It's not too bad for now.
It's an inline set of numbers that Bajaj Finance has reported.
Support for the Nifty comes in at the 20-day moving average, which is now just under 19,700.
The broad takeaway is that Q2 was fine, but the companies have lowered their full-year guidance.
Absolutely flat, so not doing much at all, just hanging around that 19,800 mark.
And the global economy, excluding India, is not in a particularly buoyant state.
We've had issues in Semcon and hyperscalers, consumer electronics.
The Nifty was cruising above that 19,800, and from that level, we've lost close to about 50-60 points.
ABB Global, if you're looking at the numbers, it's clearly a mixed set from them.
Revenues declined 14% on a YY basis, but EBITDA was higher.
What you're seeing post-pandemic is just a reversal back to pre-pandemic levels of the amount of funding.
Israelis say that it was not them, and they say they have proof that it was a failed rocket launch.
100 points lower on the Nifty. We are at that 19,700 mark.
Well, that was the day so far. This is the last hour here on Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios, and we've got the full OG team with us today after a few days. I'm Prashant. Rima and Surbi are here. Surbi, welcome back, and Rima, hi.
Hi.
Nigel,
not much changing, right, Prashant, guys? Unless this last hour proves to be different, right?
I mean, nothing ever changes. In moderation, I think you can take
Spoken
that
like
statement.
an old man.
But it's been stuck, right? It's been stuck for a while. This range 200, 250 odd points is what we kind of are respecting so far. Today, there is a bit of a cut, so markets have been under pressure. And as we speak, we are exactly at the 20-day moving average on the Nifty. I mean, that was, we highlighted that as the support, and we are around the 20-day, which is just 19,698 or so is where that is. If this is gone, then the next support comes in, which is the 19,650 level, which is about 50 points from here. That's another closely watched technical level, which is the 40-day exponential moving average. The Nifty Bank is at a trendline support. So lots of these supports being tested with this cut. I mean, the Nifty Bank, the cut is larger. Now that is at about 43,950, and we are under it now. When we put those numbers in, we were about 20-30 points above. We are under it now. So 43,939 is where the Bank Nifty is, and next supports, of course, come in at the 43,600 level. If you remember, I think for a few months, this is the level. 43,600 odd is the level, which is the low, which was respected. Mid-cap index is down 0.8. The small-cap index is relatively better. It is flattish. So that's the picture overall. No great additional cues from what happened in Asia or, European markets, etc. Nothing directional, at least. U.S. futures, the last I checked, were flat to slightly on the lower side. Rima.
1 hour left for closing, and the sensex is now below that 66,000 mark. The Nifty is hovering around 19,700. Lower by 100 points, while the Sensex has lost close to about 500 points. It's the banks which have taken a tumble. The Nifty Banking Index is down 500 points, a clear underperformance over there, with names like Bajaj Finance, HDFC Bank, Axis Bank, ICICI Bank, all the heavyweights losing ground. Pharma is holding up on the other end of the spectrum. So the Nifty Pharma Index, a bit of a defensive, especially at a time when the IT earnings have not seen any fireworks. So Pharma is holding up. Cipla, Dr. Reddy's amongst the top gainers. Mid-cap IT, the cuts are getting deeper now. So L&T Tech started off trade in the red, was down about 2% at open, but now extended the fall to 5.5%. Zensar too, after indicating that Q3 is still going to be subdued because H2 is normally weak. But you are seeing the losses accelerate in the mid-cap IT. But we've still got a lot of IT earnings left over the next 2 days.
Yeah, but I think the market's taken what they've heard, pretty much as is, that the environment is weak, top-line growth is hard to come by, and therefore you're getting, quite a few of these reductions in terms of full-year guidances as well. So, and that's what's really playing out. Examples would be, of course, L&T Tech. That's the one that's been down right from the morning. A couple of other names as well, where we're talking about weakness, would include a lot of the PSU stocks as well, as we talk about it. In terms of some more names that stand out on the way down, I'm looking at ABB India. That's because of the wordings and the commentary we had from the global parent, where they're talking about deceleration in some of their other markets. So actually, they're singling out India as relatively better off, but still that stock's down quite a bit. There's a Biocon and Syngene. Again, those are more of result reactions that are playing out on Syngene. Stock's down about 4-5%. And as I was saying, even Sensar is now down about 5%. A lot of the real estate stocks that had a great last week, Keystone Realtors would be an example. That's where the profit is coming off. But Nigel, I remember what you were telling us about. I keep remembering that chat on MMTC that we were having last week, right? And you were saying, be careful, this is low float, think about the fundamentals. I'm not sure what's triggered it, but look at all of these stocks today. STC, State Trading Corporation, 10%, MMTC, Hudco, of course, there's an OFS. I don't know if that kind of got people a little worried, but this is quite something, as you were pointing out.
You know, Surbhi, we need to alert our viewers, to be cautious at times, and that's precisely what we have done. It's our duty to do that. Stock prices, well, they could move up or down, but we need to alert viewers with regard to the low float as well. So just look at what's happened today. Take a look at a few stocks, KIOCL, ITI, and MMTC. Now, these stocks in the last 6 months, they're up by more than 100%. They're more than doubled. But in today's trading session, if you look at the intraday chart of a couple of these, KIOCL, ITI, they are down close to around 15% from the day's high itself. A big downtick that we've seen out there. What's common in some of these names? You have STC as well that's come off. Now, we are at CNBC-TV18 around a couple of weeks ago, I think 2.5 weeks, we put out this piece on ERT, that's Editor's Roundtable, that some of these stocks, they're floating like butterflies, but be careful because they can sting like a bee as well. And today, these stocks are getting stung. Take a look at KIOCL. Look at the free float. It's less than 1% out there. Last year, EBITDA loss and net loss as well. So the reason that the stock actually has moved up is because the float is so limited. Next up, ITI. The government of India owns close to 90%, and then another government-backed fund, that's a special national investment fund, has 7.6%. So effectively, the free float in the market is around 2%. Last year, EBITDA loss as well as the net loss. So that's another stock. MMTC. That stock was going one way as well on all sorts of rumors. 93% is held by LIC as well as the government of India. And last year, they delivered an EBITDA loss. They delivered a profit number only because of other income. Otherwise, that as well would be a net loss. So it seems the fundamentals are catching up out here because low float was something that was driving these stocks up. And finally, a couple of banking names that we had highlighted, 2.5 weeks or so ago on the same piece. Punjab and Sindh Bank as well as UCO Bank. Now just take a look at the float in the market. It's around 2 to around 4%, and some of these stocks were trading at 2-3 times price to book. And the last 1 month chart, tells you the picture. From the highs, these stocks have corrected a goodish bit. From the top, actually, the recent top, they are down close to 10-12% odd. So clearly, this free float game seems to be catching up finally. We were trying to reason with a lot of investors, a lot of traders, but they were saying the stock will go up one way. You need to keep an eye out on fundamentals. And now the only reason that the stock has been moving up is that, in fact, there was very, very limited, float in the market. So be careful, investors. We're just here to caution you and alert you. Some of these fundamentals were way behind, but the stock prices were running ahead. So that's just what we want to put on the table because these stocks have come off the top, particularly today. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar is with us. Hi, Mitesh. Good afternoon. Well, today it's been a little of a down day. The Nifty bank is getting knocked, the Nifty as well. Your approach to the final hour?
Yeah. Good afternoon, Nigel. So I think a couple of things, we were talking about the fact that we'll be range and we might actually head towards the lower end of the range, which was 19,650 and 43,800 for the bank Nifty. I think we're practically hitting those levels. What has happened in the last 2 or 3 hours is that on the hourly charts, we have had some negative turns on the indicator. So I think now these levels could be under threat. I would now look at even a test of 19,000 and 550, 500 zones, 19,500 for the Nifty and 43,400 for the bank Nifty. I think these are realistic targets. So in that sense, position yourself more on the short side. On the stock side also, I would advise cutting down on long exposure and looking at, shorting opportunities. Right now, I have one buy and one sell call though. ITC is something, which I think has done a correction. So around these levels, good to accumulate this one with a stop below 440, 446 and target of around 462 can be looked at. While Lal Path Lab is something which is a good shorting opportunity for me. recommend shorting here with a stop just above 25, 26 and a target of around 24, 35, 24, 40 can be looked at.
Okay, thank you very much for that. Polycab, let's talk about that. Just reported their Q2 numbers. Surbhi is here with the fine print. Surbhi.
Thanks so much for that. So Polycab, the numbers look good. The numbers are better than expected. There was strong revenue growth in the cables and the wire segment. The EBITDA margins have been maintained despite a rebranding exercise. So the expectation was sequentially the EBITDA margins would drop because of the rebranding exercise and higher ad spends, but that has not happened. So let me take you through the internals. The revenue is up 27% on a year-on-year basis. They've seen a gross margin expansion of 100 basis points. The EBITDA is up 42%. Margins have come in at 14.4% versus 12.8% same time last year. And the profits are up nearly 60% on a year-on-year basis. And that has happened also because of higher other income. Now, when you look at the segmental performance, in the cables and wire segment, which is majority of the revenues, there the revenues are up 29%. The EBIT is up 60% and margins are at 14.6% versus 11.7% same time last year. And even if you look at the last 4 to 5 quarters, they've slowly inched from 11.7% margins in the cables and wire segment to now close to 15% margins. There is a 20 basis points decline sequentially, but nothing that big a concern. And in the FMEG segment, they've seen good revenue growth. Revenues were up 8%. The lighting segment was expected to be muted, so that was on expected lines. The losses have expanded over there. Losses of 6 crores versus of 30 lakhs same time last year. In the last 1 year, Polycab has doubled, and it remains to be the most expensive valued cables and wires company. So that is also that we need to keep on our radar.
What are the valuations, if you remember, of Polycab?
They're close to 50 to 55 times FY24 PE. So compared to Havells, which is 48 times FY25 PE.
Got that. Thank you very much for that. Strong numbers, but it looks like all the good news is priced in, because after the stock going up 100% in the last 1 year, today, as a reaction to the earnings, it's down close to about 2.5% and sharp fall as soon as the numbers kicked in. Prakash is with us on the show. Prakash, this has been the darling of stocks. It's a B2B player. It's been a beneficiary of rising infrastructure, real estate, the entire capex cycle. But what from here on? Given the valuations where they stack now, even if the company keeps reporting good numbers, do you think there will be a stock upside?
Good afternoon, Rima. So I do agree with Surbhi's last, comment on the valuation. Now, if you are okay with a PE multiple of 50, forward PE multiple of 50 plus, and a PEG, which probably is fairly significantly higher, then there is an issue in terms of what you could expect. Now, what happens is these stocks where most of the long-term investors would be sitting on significant profits are the ones that get very vulnerable if you were to see a drawdown. So, I personally feel that the market setup now is that stocks that have performed well and don't yet have that kind of visibility to keep that run rate going will start getting very vulnerable as we kind of see some sort of peaking out. So I would not want to kind of put more money into this. In fact, it's a good time to book profits, and that's exactly what's happening. The larger capital goods plays, direct or indirect, are the ones where profit booking is happening, and people are discovering companies which are smaller and lower on the value chain, and that's where probably the next round of delta will be made. So I personally feel it's time to kind of be a bit cautious with some of these good companies.
Okay, that is a word on Polycab. Stocks are selling off quite a bit as we speak. Prakash, hi, good afternoon. Wanted your thoughts on this huge mid-cap PSU cool-off that we are seeing. Nigel was also just talking about it right now. I'm not sure what caused it, just a general sense of caution in the market, or the OFS that we have going from HUDCO. Some things kind of just switched on that light bulb. As Nigel was saying, that these are low float stocks and they've gone up like rockets. What would your advice be here?
So I do agree with what Nigel was explaining, and in fact, Anuj also had put out a tweet some time back, and probably they were the same names that he was referring to, covered in the story. So between the two of them, they've done enough to caution people. And usually these low float companies, what happens? It's not the investors who book out. it's actually the people who have vested interest in, ramping up the volumes in low float stocks. They are the ones who suddenly start realizing that, probably it's somebody's kind of figured out what's happening and it's time to, get out. So they are the ones who probably would want to move out rather than the investors. And in any case, you need to look at companies with profitability and visibility of earnings. That's not happening here. The other reason why, so this is separate from the low float. I'm talking about the generic PSU sell-off that you see. There is some, news about the government probably mulling some sort of dilution in OFS in a lot of other PSU names too. And in fact, about a month back, Nigel had also brought that story out. So probably it's kind of crystallizing in some way, where if Woodco had to kind of be, put through that OFS route, you'd probably have some of the other companies also where the government can possibly shore up some sort of, and there's, if every promoter is looking at cashing out at these levels, there's no reason why the government of India can't also think alike. So there is a potential, supply excess that could come in. And that's probably, that's worrying a lot of people in some of these stocks which are sitting on good profits. But if the underlying business is promising enough, especially some of the railway stocks and all, I don't see any reason why you need to panic. My guess is most of the supplying good companies will get absorbed very quickly because there's so much money waiting in the wings from institutional investors who haven't probably deployed it beyond, the top 250 companies.
No, got that. The other one is Bajaj Finance, which actually is a bit under pressure. It's actually, with a 2.5% cut, it's one of the big losers, one of the top losers, at least on the Nifty. Abhishek is standing by with a quick check of what brokers are making of the numbers, both on the bull side. Is there a bear side on this one? Abhishek, over to you.
As you mentioned, the numbers were in line. However, what I learned from analysts is that in the con call, the management has actually guided for net interest margin to decline by about 30 basis points in the second half. So largely that may play out in Q4. We have a bull versus bear scenario where, brokerages are divided. So for the bulls, the brokerages do say that growth and profitability are strong. Asset quality is normalizing. Growth outlooks also remain strong as management has held on to the guidance of AUM growth of 29 to 31% for FY24. There is no inorganic aspiration in near to medium term from the management, and the entry into new segment is also aiding the growth in AUM. So brokerages like CLSA, HSBC, Jefferies, etc., they have a target price ranging from as low as 9,470 per share to as high as 9,620 per share. On the bear side of the analyst community, they say that the net interest margin decline and higher credit costs are actually key negatives from the results. A capital raise would be used for organic growth and to also infuse money into the housing finance subsidiary that they have. So capital raise would increase FY24 book value by about 14%, and valuations for Bajaj Finance looks to be on the expensive side. So we have Goldman Sachs with a sell rating and a target price of 7,205 per share. Also Macquarie, which has an underperformance rating and a target price of 6,300 per share, who are batting for the bear side of the analyst community. Back to you.
Okay. Well, Abhishek, thanks very much. That's nicely summarized. Prakash, any thoughts? Bajaj Finance here?
So, I think if you see the numbers, they are very much within the guidance that was shared last year. And also, last quarter was one of the, best growth in AUM for the business in the last 15, 16 quarters, Prashant. So it's always difficult to keep on, matching that or exceeding those kind of numbers once you're closer to your peak performance, unless, there is some disruptive new revenue stream that kind of starts helping them out. The other thing that I thought the NIM contraction that was expected wasn't as bad. The management said the next 2 quarters are going to be tough, but that didn't seem so. So, barring a few misses, very minor misses here and there, I think the numbers were good. But then this is always available at a premium. And the market expectations, according to that, are matched or anchored around that premium valuation. So that's exactly where the disappointment is. But I would believe it won't see any kind of erosion in terms of interest or pricing at this point in time. What we've seen is more sentimental, given the softness going ahead. But there was nothing new in that. And it will probably come back once things look up in that sector as a whole.
Okay, all right. Prakash, hi, and thanks for remembering, those pieces that I put out. Our duty is just to alert viewers and caution them. And glad you took note of that as well. But I wanted to ask you about this one particular name, Dalmia Bharat. You've been a bull on that and you've got it bang on, right? These numbers actually were a little bit better. The problem is their volume growth is lagging what the market is doing. Though they're saying from Q4, they'll return to their winning ways. How do you view this stock at around 2,200? Because now it's not that stock that's 900, 1,000, 1,400. When you were very, very bullish, 1,500 as well. It's a 2,200 rupees stock. Your view from here on.
So yeah, Nigel. So and thanks for reminding all of us of Muhammad Ali when you mentioned how you describe those low float stocks. Interestingly, the cement pack is something which is going through very different and unique behavior. You see companies which are looking at acquiring and growing inorganically very rapidly, given the fact that it's going to be extremely difficult to set up greenfield projects now in India. And availability of raw material and all attendant issues, of course, all of us know about it. And this is other pack which is looking at being acquired. So, whether an Orient goes through goes under the gavel, or whether it's a Sagar Cement that probably, comes into that picture, we don't know. But, after Sanghi Industries, what has happened is there is a very clear indication that consolidation could be very serious in this sector. And that's the reason why the larger players are trying to grow as rapidly as they can. Dalmia Bharat's volume, the tepid volume growth that you mentioned, I completely agree, has been because they've not invested into distribution for the last many quarters. They've been doing a lot of debottlenecking in terms of their operations to scale up. Now, once that is done, probably well-timed would be that, the distribution will also reflect that kind of a growth on the production side. And this time, of course, the costs have been very well controlled, and that's one of the reasons why their numbers look good. But I think from here on, they'll have to do something fairly different on the distribution side and the sales side to match up with the volume growth that's expected at these valuations. Otherwise, you'll probably see it getting a bit consolidated for some time till the overall industry reset happens. But yeah, you're right. From that sub 1,000 to 2,400, it's a very good performance that they've done. But I wouldn't expect the same rate of growth going forward.
Prakash, do stay on. Need to get into a short break. On the other side, we'll continue our conversation. We'll also invite Trideep Bhattacharya, CIO Equities at Edelweiss AMC. Welcome back. Mid-cap IT is struggling in trade. L&T Technology has lost 5.5%. Zensar is staring at a cut of 5%. Happiest Minds too is weakened further, 2.5% gone on that. The only one holding up in the green is Tata Elxsi. Now let's quickly, run our viewers through the problems. Both LTTS, that's L&T Technology, and Happiest Minds have lowered the full-year guidance. L&T Tech is saying that instead of growing at 20%, we will now grow at 17.5% to 18.5%. Happiest Minds was earlier anticipating revenue growth on an organic basis, ex of acquisition, to be between 15 to 20% this year. They're now saying, given the macro challenges, the headwinds, slow decision-making, organic revenue growth will be 12%. So that's the problem. Companies have lowered the full-year guidance. Zensar Tech, too, is saying that Q3 is going to be subdued. Generally, second half is weak for the IT companies because of lower working days. There are furloughs, and this time it's going to be no different. The other thing is that IT companies have seen a phenomenal rally. They've outperformed. Look at Zensar Tech, for instance. It's up 150% on a year-to-date basis. Even something like L&T Technologies up 25% on a year-to-date basis. So these stocks have outperformed. Many of them are also fairly expensive. Now, according to, Nuvama, the stock, Zensar is trading at about, much higher than the historical levels. And they're expecting the company to grow at only 0.8% on a sequential on a year-on-year basis in FY24. So stocks have run up, valuations are on the higher side, and we still have a lot of IT companies still, yet to report their numbers. Today you've got Wipro, LTIMindtree, Persistent. Tomorrow you've got Coforge, Cyient, Mastech, Emphasis. So the picture will be clear, but the question now is there a risk of the mid-cap IT outperformance coming to an end? Prakash, do you, based on this Q2 numbers that we've got since last week, do you get the sense that we're still in for some more revenue EPS downgrades? And maybe this could spill over into FY25 too?
Well, FY25 probably is a bit too far, and the way the situation is changing on the ground so rapidly, I wouldn't be able to hazard a guess there. But from a very clear indication is that while there are there's a significant improvement in order books. Very clearly, the TCV numbers have indicated that even for the larger players, the mid-size IT names will have to figure out how strongly they can grow the niche. Now, if you look at some of these companies which have done well, they've done well by getting newer clients and new order wins from top 100 or top 20 or top 25 businesses or clients. So what's happening is there's accretion of newer businesses that's helping them or could help some of these companies, which might be slow to start reflecting in the revenue growth. So I would definitely agree. There is a little bit of a caution. There is a little bit of a skepticism in terms of how fast they can grow. But I don't think the valuations are so, overboard in that sense from what it used to be, let's say, a year back. I mean, you had 35, 37 multiples, which have now kind of mellowed down to about 24, 25, 22 in some of the good companies. So I would believe there is opportunity for people who believe in the IT story from a longer term perspective. And the next 2 quarters will give you that window to get it. So, yes, there will be a softness. There is softness. But at the same time, there is opportunity to buy because good prices and good news never flows together. So there's always that angle that you have to look at.
All right. Fair point. Prakash, we'll leave it on that note for this afternoon. Thank you very much. Always great having you on the show. You have a good rest of the day. Okay, before we move on and get to our next market conversation, let's actually look at Bank of Baroda because there are some updates coming in. We are learning from sources that BOB has suspended quite a few employees after an internal audit was conducted in the BOB World case. BOB World being, of course, that ill-fated app, which is in the eye of the storm with the RBI, of course, picking up the issue now. Ritu is joining in with the latest. Ritu, what are your sources telling you?
That's right, Surbhi. An internal audit was being conducted by Bank of Baroda after this issue came to light, and RBI asked them to look into it specifically, and now we understand a few employees have been suspended. The total number of employees that have been suspended could not be verified, but we understand that the number is not very large. Most of these employees belong to Bank of Baroda's branches in the north and northwest region, particularly from Gujarat. And these suspension letters that we have reviewed, they were only sent on the 16th of October. So this is a very recent action that Bank of Baroda has taken months after this matter actually came to light in July when the first reports had surfaced. The suspensions are very much linked to the tampering of customer accounts to boost registrations on their mobile banking app, that is Bob World. We read through the letter as well, which clearly states that the suspension is on account of wrongful registration, activation, and deregistration of Bob World apps without the consent of customers, in violation of the bank guidelines as the reason for the suspension. We've also been given to understand that initially, when the probe was ongoing, Bank of Baroda had actually transferred some of these employees to smaller regions, not really suspended them. And it's after a lot of, probing and, some conversations with RBI that now this action has been taken. It remains to be seen if RBI is going to be satisfied with just a few suspensions or will further action be taken. We've written to Bank of Baroda in the matter, but they have not responded to our query.
Okay, all right. Bank of Baroda, of course, is in the RBI crosshairs as well with that suspension of onboarding of new customers via the platform, the Bob World, the online digital platform. Stocks at about 203. The market, by the way, has come off just a little bit more from the time that we started. We were down around 125 down now, 19,685, just under the 20-day for the Nifty, and actually coming down to the 19,650 level, which is the 40-day exponential. Tridi Bhattacharya is with us. He's Chief Investment Officer Equities at Edelweiss Asset Management Company. Tridi, good to have you with us here. It's a overall red kind of a day, lots of red all across.
Thanks for having me.
Afternoon. Results are coming through thick and fast. We just got Polycab numbers, which were better than expected, pretty much on all fronts. The one constant disappointment in Q2 has, of course, been IT services, as Rima was also telling us. It's too early, but anything out of the ordinary to your mind? Anything, any number would surprise you, a stock you have in your portfolio?
I think by and large, my read of IT result season will probably get done by the end of this week. So most of the results are in, a few remaining which will get done the next few days. The way I read the numbers are as follows. Basically, deal signings are still happening, but execution is meaningfully weak, which is why if you look at the TCV numbers of various companies that have reported, they have held down okay, but when they are talking about full year numbers, they are kind of cutting the guidance to indicate that the execution has been weak. So the intent has not gone away, but given how the macro is stacking up, the execution is quite weak. That's the second point that I would make. Third, I think, quite frankly, over the last 2 or 3 months, whether it's mid-cap IT or mid-caps in general, have probably rallied a bit ahead of themselves, which is kind of, finding its ground, backed by fundamentals as the result come by. So as a mix of these two, I think overall, nothing alarming to say that things would kind of really fall off the cliff. But at the same time, it just goes on to show that it's bouncing around the bottom. I think it'll take probably 1 or 2 quarters before the bottom is struck with regards to earnings estimates. And I think that's when I think the stocks and investors are looking forward to anchor around before it starts moving in the right direction. So that's how I would kind of summarize my understanding of the IT results so far.
All right. Pradeep, just hold on to that thought. We're getting some comments coming in from Orient Cement on the wires. They say that they're not privy to any kind of discussions. Now, they're clarifying on this morning's media reports which suggested that they're likely to deal with Adani. So they're saying that, in fact, they're not privy to any kind of discussion as of now. Remember, in the past as well, we have heard this, a few months ago. And at that point of time as well, they'd come out with this clarification that, there was no truth at that point of time, and they were not privy to any kind of this discussion. The stock has been undervalued, but on this report itself, that's an important clarification that's coming in there from Orient Cement. Time will tell whether or not there is a deal in the making or not. But Trideep, since we're addressing cement stocks, what's your view on a couple of these smaller names? The street is waiting by for some kind of consolidation. How do you all position yourself? Will you all stick to the big boys because the big are getting bigger, or some of these smaller companies could get lapped up? Your take?
My sense is the sector is going through a bit of a recheck. Less so has happened so far. More lies in front of us. When I say that our owners are changing hands, so capacity is changing hands on net balance, and by virtue of which, as you said, it is better to be in the consolidators rather than people who are getting bought out, because eventually those are the guys who would benefit. But having said that, in this process, if one of the players get a little more aggressive with regards to capacity expansion, that might mean a bit of pricing weakness to come through. For the moment, we don't assume that. For the moment, we would be probably overweight, marginally overweight though, the cement sector, because cyclically speaking, we think that capital creation is well on its way in India. And as part of that, cement would actually stand to benefit. But this sectoral dynamic is probably keeping us from going meaningfully overweight from where we are.
Okay, so a bit cautious on cement. Trideep, hi, good afternoon. So, what's top of mind now? I think we're seeing this whole PSU rally play out, and don't know if it's now coming into some sort of a consolidation patch or not. What is it that you have your eye on at the moment?
I think basically, if you look at the result season so far, companies who have overseas earnings have come and lowered their numbers, if you really look at it. Whether it was a pharma company or, for that matter, some of the IT services companies, people who are exposed to the globe have taken their numbers down, is a sign of global macro weakness, and more so after the geopolitical tensions that are coming about. So in this, our initial stance has been to bet on domestic earnings. That probably doesn't change. What we are kind of incrementally eyeing on is that where things have sort of gone on to the excess, for example, in some aspects in auto or auto hangs, while the numbers are going to be good, overall, are there any pockets which are worth interesting and looking at, is one area that we are interested in. Also, given that in the consumer side, or particularly on the aspirational consumer side, we have World Cup and a few other events lined up where companies exposed to those segments could do a little bit better than what people anticipate. That could be the second area. So these are the two areas, broadly speaking, or two or three areas that we are kind of feeling our way into the market or out, depending on what the case might be.
Trideep, I believe in one of your funds you hold Syngene in the mid-cap fund?
Yes, we do.
Okay. And what did you make of the numbers, the cut in guidance? And is the fall... Yeah, go ahead.
Go ahead.
No, just wanted to ask that, since the stock has fallen today on the back of negative news, is this an attractive entry point, or do you think what they've said in the Q2 number is a shift in the thesis that you have, and therefore you would avoid it and wait to see how it plays out?
So I think obviously we can't make stock-specific comments, but I would say that, as I was said early, that some of the companies which are exposed to global earnings or global sort of dynamics have cut their numbers overall. And I think what we are encouraged with or standing by is that the fundamentals of the business are kind of fairly strong, whether it is deal making or kind of funding for certain areas of their business might have kind of taken a bit of a knock in the near term, given where the macro conditions are. We think that overall some of these areas would actually stand to come back. So I think that's our reading at the moment with regards to the global earnings where we are exposed to. But if you look at our overall portfolio positioning, we would be overweight domestic earnings and underweight overseas earnings. On net balance at portfolio level, that's what's probably helping us today and in times like this.
Okay, all right, Trideep, thanks so much for stopping by and filling us in with all of those views on the market. Wish you well, have a good evening, and look forward to having a chat with you rather soon. Well, the markets actually have taken a bit of a downtick yet again. The Nifty bank is down more than 500 points, and that plays out expiry. So the last 30 minutes or so will be quite interesting out there. And from the broader market, just want to point out one stock, VIP. Suddenly the stock has spiked up. It was trading in the red. In the last 5-10 minutes, it's been a bit of a volume spike, and the stock as well moves higher. But plenty to talk about. Nimish joins us to tell us what he's picking up in D-Street Chatter. Nimish, what's it like today? It's a weak session.
Well, weak session, and all the hopes were in financials. We spoke about that yesterday, right? Because if the market has to go up from here, financial has to fire. And that's not been the case today. The bank, Nifty bank is down 1%. Bajaj Finance, despite good numbers, is down 2%. So that shows the kind of traction which is there for the financial names. It's largely selling pressure from the large institutions. That's the overall feedback. I guess we're stuck in this very narrow range from the last many weeks now. 830 is acting as a very strong resistance on the upside. Twice we've reversed from there. And I guess 19,630 is a level, support level on the downside. So we're stuck in the 200 points range, so to speak. In terms of flows, as I said, there is selling pressure, and I guess it's also influenced by the ETF rebalancing today. There is a wisdom tree ETF rebalance, which will have an impact on few individual names. That's a flow perspective. I guess again, the problem today is. For the first time, there are some signs of profit booking in the broader markets as well. In the last many days, while the Nifty has been range bound, the broader markets are outperforming. That's not the case today. There are genuine selling pressure and profit booking as well in the broader markets now. So that's a bit of a worry side. But largely, the selling pressure continues, and it's the bank Nifty which is dragging the markets down. So watch out for 19,630 on the downside for a strong support.
Okay, all right. Nimesh, what about individual stocks, though? Today's been a bit of a down day from the broader markets, but stocks doing a thing of their own.
Oh, yeah, absolutely. So I'll start with the first stock. The first one is Divgi, Transformers. That's one stock. There was a large block. Nearly 3.5% equity got changed hands today. Most likely, it's what I understand is going to be a mutual fund to mutual fund trade. A domestic mutual fund has completely sold out, and another leading mutual fund has bought. So the disclosures could be important in this particular stock. The second stock is Patanjali Foods. Been consolidating in a very narrow range of late, but I understand at these levels there is a leading long only fund which is an active buyer. So the disclosures in the scheduling pattern will be quite interesting, in Patanjali Foods. And the last one is GAIL. In a bad market, in a weak market, that stock is holding out. Marginally down, but there are strong buy flows, and technically too, it's on a breakout stock. So there is a bit of buying interest back in GAIL from large institutions.
Okay, got that. Thank you very much for all of the chatter, the buzz, and the details there, Nimesh. By the way, good news for central government employees. There's a DA hike that has been announced. This is coming in, I think, from the result after the cabinet meeting. I think there's a briefing that is going on. Okay, Rabi mustard MSP has also been increased. We'll keep getting you more updates from that important meeting. Right now, quick break. We'll come back on the other side. And as always, we'll get you some trading calls with Mitesh. And then, of course, we'll be in the final leg of today's market action. Welcome back. Let's go across to Mitesh to get some final advice for final minutes of trade. And it's getting really weak. By the way, we've broken the Monday low long back. The Nifty is now nursing a full 140-point cut. So it's been quite a quite a bit of a pushback for the bulls today. Mitesh, what's the sense now? Next levels to track and also any trades?
Yeah, I think, Survi, as I mentioned, 19,650 and 43,800 were the respective levels on the Nifty and the Bank Nifty, and both are under threat. So I'm looking at a possibility of the Bank Nifty going to 43,400 if we see a break below 43,800, and Nifty, if it breaks 19,650, then 19,500 is the next likely level. So there should be some pressure because the hourly charts have slightly turned weak in the last 2-3 candles. And now position should be more on the negative side. I have a STVT on Page Industries with a stop at about 38,750 for a target of 38,200. And stock, I had a buy on ITC earlier. Godfrey Philip made a fresh high and still trading strong. So we'll take a BTST on the long side there with a stop at 2260 for targets of 2375.
Thank you very much for that. Pharma is fighting for the bulls. The Nifty Pharma Index up 0.7%. The top two Nifty gainers are Cipla and Dr. Reddy's. Yet to report all their Q2 numbers. Ekta is joining in, and she's going to put the spotlight on the key expectations from the pharma sector in our special offering, Quarter Se Quarter Tak. Ekta.
Thanks very much for that. Well, we can expect a healthy quarter for pharmaceutical companies with revenue and EBITDA growth of around 12 to 15%. Growth will be aided by sales of key drugs in the US, such as cancer drug Revlimid generic, and easing cost pressures as well as currency tailwinds. Now, for the US, the street is working with as much as a 16% constant currency growth, mainly due to Revlimid generic sales and stable pricing pressure. Expect a flat performance Q-on-Q due to flatter, stable Revlimid generic sales. Now, domestic growth is expected to be tepid at around sub 10% year-on-year due to a weaker monsoon, hence softer offtake in acute therapies. Now, margins are expected to be aided by a better product mix as well as normalizing cost inflation. Sun Pharma numbers to be aided by sales in Revlimid generic along with the US specialty business. The street will also watch for commentary on pending US FDA issues such as Halol as well as Mohali. Now, Cipla along with Dr. Reddy's will be two other companies that will be aided by sales of Revlimid generic on a year-on-year basis, but likely to slow Q-on-Q. Cipla is likely to make around $25 to $30 million from this drug this quarter, and Dr. Reddy's around $85 million. Commentary on a possible stake sale will be watched closely from Cipla. All eyes will be on Lupin as the company will benefit from the inhaler Spiriva generic sales. The street anticipates the company making around $15 million from it in just this quarter. Margins and profit could be aided by the strong US performance. Now, other companies to watch for will be the base business performance for Divi's Labs, integration of Viatris's biosimilar business for Biocon, sustained Q&Q recovery in Loris Labs, and Gland Pharma numbers as well.
Okay, all right. Thanks very much for that summary, Ekta. We are going to watch out for all of those cues and all of those specific drugs, how they impact the respective companies there. Mayuresh Joshi, Head of Equity Research at William O'Neill, is now with us. Mayuresh, good afternoon. Good to have you on the show. So let's start off with pharma because Ekta has given us a quick capsule to summarize the Q2 expectations. How are you positioned on the sector and what would your top picks currently be?
Afternoon, Surbi. Always a pleasure to be on your show. On our global focus list, two stocks prominently stay. One is Cipla and one is Sun Pharma. As Ekta was mentioning, obviously Revlimid is going to be a key contributor. Quarter on quarter, the number in absolute terms might be a little bit off. But the expectations with both these counters, in the case of Cipla as an example, the respiratory drug portfolio and the launches of Advair, the expectations in terms of complex generics like peptides expected to get launched in the next few quarters. And the expectations of the management keep EBITDA margins between 22 and 24%. I think that is something which will keep earnings very, very buoyant for Cipla going forward. Obviously, I think what happens onto their FDA, with FDA concerns onto their plants is something to be seen. But the bottom line growth should also be equally strong, with these expectations probably getting built in. Even for Sun, as an example, both the domestic formulation business, like in the case for Cipla as well, both the acute and the therapeutic chronic therapies should probably continue doing well as we head into the next few quarters. And US formulations should hold up for Sun Pharma. Margins around at 27% for the larger part of this financial year, with R&D expenses to be around 5.5% for Sun and around 6.5% for Cipla. They've got almost 98 ANDAs in the pipeline, a few of them complex as well, like in the case of Cipla, which if launched in the next few quarters, can have a significant impact in terms of earnings. So Sun Pharma and Cipla, Surbhi, stand prominently out in our global focus lists.
Okay, we'll take a quick break here. My dear, stay with us. The market is down at about 19,665 or so, down 145 points. So no real recovery or anything of that sort. We'll take a break. We are back and more markets on the other side. Also heading into close, just 10 minutes to go for the end of the session. Stay with us.
Welcome back. Bajaj Finance is going to go home as the top Nifty loser, a cut of close to about 3%. Mayurish, numbers were okay. It was a decent set of numbers. They're getting back to acquiring customers. There has been a pretty good 5% pickup in the customer additions on a quarter-on-quarter basis. What explains this 3% fall, and how would you approach this cut today?
So, afternoon, Reema. I think numbers were pretty decent, and with the kind of update that they've probably given, more or less in line with what they were believing could get delivered. Having said that, the overall AUM growth, an absolute number of 290,000 with a growth of 33%, I think that is an exceptional growth in terms of both AUM that they have done quarter on quarter and on an annualized basis as well so far. The OPEX to NII is a very interesting number because that has now come down to 34%. And as their digital capabilities built in more with their app in the next few months and quarters, a lot of these operating expenses are going to come down even further, creating more leverage in terms of how bottom line will probably look at. And therefore, the reported ROE was at around 24.1%. And with gross and net NPAs both coming off, net NPAs at 0.31, a strong addition in terms of new loans that have got added on the existing base itself. I think it's done a pretty good job. I think what the street probably believes is the impending competition that can come in from Jio Financial in a few of their verticals in which they are probably present, consumer durable loans to be more specific in the next few quarters, and whether that can have a huge impact on Bajaj Finance. But I think there is a huge market out there. And at the end of the day, Bajaj Finance is a qualitative franchise. So I'll not be too perturbed. Anybody holding on to the stock should hold on to this qualitative franchise.
All right. Mayurish, we'll leave it there. Thank you very much for joining us and running us through your perspective on things. You know, we are winding down and coming into the market close. We'll end just above the 19,650 level. And when we come back tomorrow morning, I think all eyes will be on U.S. markets and, the close that we have and those kind of things. Because, the market basically on both the Nifty and the Bank Nifty is leaving off things that, in a delicate kind of a zone. The Nifty, for example, at the almost the 40-day exponential moving average, the Nifty Bank, trading at or just under that slightly upward sloping trend line. There's a trend line support, and we probably will end under it in terms of trade today. The mid and small cap indices also saw very little by way of respite. The mid cap index was down about 0.7, 0.8. Small caps did a little better. But this was a down and out kind of a day for bulk of the session with a little bit of acceleration on the downside, which came through, I think, post 2 o'clock. I mean, at 2 p.m., the Nifty was at about 19,725. And from there, we've come down to 19,664 or so. So sharp fall, a little bit of stabilization between 12 and 2. And then post 2 o'clock, over the next 1.5 hours, the next leg down, which basically followed. Lots of movers and shakers, and we'll get to that in just a bit. Market breadth, by the way, was in favor of decline. Some 1,500 stocks were lower, and you had about 840 stocks on the NSE, which advanced.
What was crude when you guys were doing bazaar at 8 o'clock?
90.5.
It's 92.5 now. Wow. So through the course of the trading session, we've seen a sharp spike in crude prices, $92.5 per barrel on Brent crude prices. So just as we were trading, we've seen a spike of close to about $1.5 to $2. So the street is eyeing the conflict in the Middle East very carefully, and the latest developments there are a bit disturbing. So that's perhaps one reason why the Indian markets also sold off. Banks led, more the biggest brunt of the selling pressure. The Nifty banking index down over 1%. Bajaj Finance reacted adversely to its numbers. FinServ lower by 2%. Axis Bank, HDFC Bank, IndusInd, Kotak Mahindra Bank across the board deeply in the red. Reliance Industries too down 1.5%. On the gaining side, the two pharma names, Cipla, Dr. Reddy's, giving it company with Sun Pharma, and these were the few stocks which actually look good today.
Yeah, very few actually. Just the one or two of the pharma names. That's about it. Otherwise, big cuts specifically on banking. Bad day for mid-caps as well, you'd have to say. The index today has underperformed the Nifty. The decline is about 1%. And PSUs really took it on the chin. So whether you're looking at a HUDCO, which is about 11% lower as we're closing out, MMTC 10% down, ITI 10% down. It's just a long list. GMDC 4% on the lower side. Then you come to some of these PSU banks. Central Bank of India, UCO Bank, Union Bank, anywhere between 2% and 5%, IOB. So basically, PSUs were completely out of favor today. Just goes on, the list goes on. NMDC, Hindustan Copper, PFC, PNB. I mean, on my list of losers, just large volume losers, it's entirely sort of dotted with the PSU stocks today. Let's see if we can find some winners at least. Let's put up Tata Elxsi to get the final quotes in, because on the technology side, L&T Technology Services, of course, pretty disappointing. Zensar, again, is ending lower, 3-4% lower. Tata Elxsi has been the best of the lot in terms of mid-cap IT results, and that stock managed a bit of a gain. And a good day for IRB. IRB was really running away, 7% on decent volume. So that's one stock that stood out on the upside.
But we've got an action-packed second half of the session too, with all the numbers still awaited: Bajaj Auto, Edison Bank, Wipro, and LTI Mindtree. So markets will react to these 4 nifty earnings too tomorrow. We will slip into a very short break. On the other side, we'll get you excerpts from our conversation with Tata Motors MD of Passenger Vehicles, Shailesh Chandra. Stay tuned.
Welcome back. The market closed just a couple of minutes back, and it was a down and out kind of a day. Well, the decline in the small car sales should worry OEMs that are heavily focused on the hatchback and the sedan segment. That's the word coming in from Tata Motors' Passenger Vehicles MD, Shailesh Chandra, the launch of the new Harrier and Safari range. He told my colleague Jude Sanet that the rural demand is quite okay, is quite steady. The only thing is that the bigger spending is coming into and going into the upper end of the cars, SUVs and the like. The smaller segment, the smaller car segment is indeed suffering. Listen in.
The segment has been growing over a period of time, and with now segment leading features that we have launched, the 2 cars with, I think the expectation is that the volume should grow from here. I don't want to risk speculation here, but we'll discover in the period of time next, say 2 months or so, where the demand stabilizes, because initially you do get very high demand and it is not easy to really understand what the steady state would be. So we'll just wait for discovering more about the demand Pricing is a straightforward answer to that. There was already a reference of the last price of the outgoing model of Harrier Safari. There has been significant upgrade, tech-wise, styling-wise, comfort-wise. A lot of new features have been added, which would sum to a much higher total than the increment in the price that we have taken as the introductory price. So I think if you see the starting price, the difference would be hardly 35,000-40,000 we would have given, whereas the value of the car would have increased multiple times more than that. It is definitely a cause of concern for players who have been strong in the hatches and sedan, because there is a continuous gravitation of the demand towards the SUVs, and therefore the hatches and sedans have been under pressure. And it will be the case because people have a natural preference to go for SUV-ish kind of vehicle, not because it is an SUV, but because it has a better ground clearance, because of the seating, command seating position, better visibility. So if at the same price point you give a car as an SUV, like a Punch as an option against a hatch, people prefer a Punch kind of a vehicle. And therefore this is a more structural decline that one is seeing. And it's not just a temporary decline. And therefore you would have seen that maybe last year, H1 share of SUVs would have been 42-43%. Today it is 50-51%. And that has come completely at the cost of cars. So there is a structural shift that you are seeing in the nature of demand, moving towards SUVs because the launch activities also.
But where does it leave the entry-level segment, especially given the fact that you're seeing a 5-year low as far as entry-level cars are concerned? Analysts also point out that this is emblematic of rural problems continuing to persist. Is that cause for worry?
I would say, one, rural can be, but I don't think that's a big impact. We have not seen rural demand going down significantly in cars. It is more related to customers also going for a more pricier car, more feature-rich car. So median price of the cars have significantly gone up. Now it is in the range of 10 lakh, the median price of the cars that get sold in the country. As compared to 5-6 years back, it would have been 5-6 lakhs. So there is, in general, people are looking for more feature-rich, bigger cars. But yes, it is also because the entry-level hatches and all, people are preferring more a Punch kind of a vehicle, which is also 5.5 lakh kind of a car, 5.5 to 8 lakh. So people prefer that I'll spend slightly more and maybe buy a more car with a more higher ground clearance, and which is more modern, which is new. So this is what people are looking for.
Okay, those are Bandhan Bank's Q2 numbers, which are flashing for you on your screen. Looks to be a bit disappointing. The asset quality has deteriorated quite significantly. The gross NPAs have worsened by more than 50 basis points, 7.32. Even the net NPAs have declined or deteriorated by close to about 14 basis points. So the asset quality has declined, and even the NII and profits marginally lower than street expectations. Let's get to the other conversation. India is and will be Uber's biggest market. That's the word coming in from Praveen Nepali, Naga, VP and Global Head of Mobility Engineering at Uber. CNBC-TV18's Ritu Singh caught up with Naga at the company's Bengaluru office to talk about Uber's new mobility products, electrification of their fleet, the outlook on India, the Indian markets, and much more.
India is and will be one of our biggest markets. And we've been operating here for many years, almost a decade now.
Could you elaborate more on the kind of innovation you're driving from here, from your team of engineers in India, that you're utilizing for your markets overseas?
See, I'm really proud of this. And the couple of examples that I'll tell you that we did recently is Uber Bus and Intercity. And with Uber Bus, we all use buses. I've used buses when I was growing up in India as well. One of the biggest problem I have is, will I get a seat or not? Right? Or my mom and my dad used to take buses. They all used to stand and they don't know it'll come. The second problem is they don't know if the bus comes on time. Right? They just have to go and stand there and wait for it to come and so forth. And the third is the mode of payment. Like, you got into the bus, how do I pay? Where is the conductor and all this stuff? Now you take all these three problems. What we have done is we put technology and solve these problems. Now, what you can do is you're guaranteed a seat. If you book, you get guaranteed a seat. Second is we've done enough mapping and ETA and routing work for the drivers, so they will show up on time. Like if the bus you book for 10 a.m., they'll be at 10 a.m., right? And third is we have many subscriptions options where you subscribe, and then all you have to do is just book, get into the bus, and take the ride, right? And these are some technology innovations that we have done, and we have launched it in Delhi and Mumbai, and we probably will expand to many cities, and then we'll take it global after that, right? And if it works in India, it works everywhere. If you think about it, like you reserve a trip to airport, the flight might be delayed, right? Or the terminal.
Or maybe earlier.
Well, okay, I've never seen that to be. Actually, that happened to me last week. But the thing is, the innovation, the tech innovations we are doing is we want to do a reserve. Like we don't want to be in a situation where you push that button and then, oh, I didn't get the Uber, so what do I do at this point? So you can make a reservation. That's an interesting tech. But then after that, you'll be able to enter your flight information. Then we will be able to automatically adjust your Uber reserve. Let's say if it's 1 hour delayed, and so you don't have to go to airport early as such.
If you spent any time in Bangalore, you'd know the problem of traffic congestion, the infrastructure, and you're talking about adding more to your fleet, right? Even as you're looking to electrify. How does that align with the overall objectives of sustainability for the country, for Uber?
I think what I would say is this problem is real, where our infrastructure is not growing at a pace where our mobility needs are growing.
So you need the supporting infrastructure to be in place for the electrification, but is there a sort of longer-term target by when we could see that happen in India, like you're planning for London?
I can't tell you the exact numbers as such for this many. It's dependent on availability of the infrastructure of charging stations and how much of EVs fleets are going to be available for us to consume as such, right? What we are interested in, our tech will be ready when those things are ready.
Let's talk about the people who are building this tech. You have about 1,500 engineers in Bengaluru and Hyderabad. What are your plans to ramp that up? Are you looking at any significant hiring for the year?
Now, over the years, we invested a lot. It took a while for us to get to 1,500. And as I said, we're not doing some back office work or something. We're doing core products for Uber, not just for India, but also expanding them globally as such. Now, we will invest in India, and that's our commitment, because the talent here is amazing. And I personally studied and grew up in India. And the reason why we are able to invest here is because the talent is solid. And we will lose out if we actually don't invest in India as such.
Okay, more investments in India and an Uber bus ride now on the app. I guess that's what's coming up. Well, with that, let's shift focus back to some of the earnings that flashed by just a while back. And Bandhan Bank is one such number. Abhishek is joining in. Abhishek, what really caught our eye was this huge rise in bad loans, almost 1,000 crores up, if I saw the numbers correctly.
Well, it's a disaster number coming in from Bandhan Bank at a time, when lenders or financial entities are seeing improvement in asset quality. There's a sharp deterioration in asset quality of Bandhan Bank. So it's a miss on our estimates. Both the NI and PAT is below our poll. So the NI is 2% below our poll, while the PAT is 4% below our poll. Deposit mobilization, that's grown at 20.4% YOY and about 3.3% quarter-on-quarter. Advances growth is a bit on the weaker side, growing by 12.3% YOY and about 4% quarter-on-quarter. The operating profits, they are down 13% YOY and up about 1.35% on a sequential basis. Cost to income ratio, that's increased both YOY and quarter-on-quarter. But the big picture in the result is the deterioration in asset quality. Gross NPA in absolute value has increased by more than 13% quarter-on-quarter, and net NPA has actually increased by more than 10.5% on a sequential basis. This is unlike seen for other financial entities. Gross NPA ratio, that's inched up to 7.32% when compared to 6.76%, while net NPA ratio has increased to 2.32% when compared to 2.18% in the previous quarter. PCR or provision coverage ratio, that remains stable at around the 70% level. Back to you.
Okay, thank you very much for that. Innocent Bank's numbers also flashing for you on your screen. The NII looks to be a beat, a slight bit of beat on the profitability as well. We'll just get those numbers up for you on your screen. We'll remove Bandhan Bank for a brief bit and just focus on the Innocent Bank numbers. But prima facie, I think I saw a NII number of close to about 5,075, which compares with our estimates of about 5,000 crore.
I think we're just cross-checking and tallying those numbers. Since Bandhan Bank was, it's clearly an aberration. I started looking at the asset quality picture for IndusInd Bank. No problems here whatsoever, because the gross NPA in terms of the percentage has come down slightly to 1.93% versus 2%. That's year on year. It's very steady, even quarter on quarter. In fact, just about 10 basis points lower quarter on quarter. That's at the gross level. And the net NPA ratio also looks actually better year on year. The net NPA ratio has come down to about 0.57% versus 0.6% earlier. So clearly Bandhan is an aberration. We haven't heard this from anybody, any lender, at least as of now. Asset quality is not something which is a key watch point for the sector, at least for the time being. So that is on IndusInd Bank. Let me quickly check provisions.
The profits have also come in quite smartly, 2,181. So it beats a poll by more than 100 crores. So it's a significant beat, you would say, on the bottom line too. And even on the profit, NII, as we said, 5,070 odd crore, ahead of our expectations by nearly 1.5%. So beat on revenues, margins, asset quality seems to be largely
absolutely stable. Provisions have come down. That could explain why the bottom line looks even smarter. Provisions are down quite a bit compared to last year, just about 9,738, I believe. And that's a reduction quarter on quarter as well as year on year with respect to the provisioning line for IndusInd Bank. So IndusInd looks okay, and then obviously some specific issues probably with respect to asset quality. I think Rahul Malani of Sharekhan is with us to quickly give us his first thoughts on IndusInd. Rahul, how do the numbers look to you?
So overall on NII front, numbers are marginally above estimates. And on the operating profit front, they are in line, but on the front also, the numbers are in line with the estimates. If you look at the asset quality also, broadly the asset quality is stable and the return ratios are also stable. So overall good results in line with our estimates.
Just to check, Rahul, some of the brokerages were working with a bit of a margin compression that would have started showing up this quarter. I think Kotak was talking about 10 basis points thereabout. What were you expecting on the margins front? I don't know if you've been able to work the numbers just yet on NIMs.
So our expectation was at flat NIM sequentially, and right now the numbers. Looking at the actual numbers, it seems that the NIMs have been stable sequentially.
Okay. Your guess is NIMs have been stable sequentially. Ashutosh Mishra of Ashika Stock Broking with us on the show. Ashutosh, what would be the top 3 takeaways for you from IndusInd Bank?
So performance looks quite stable for the bank, basically led by the stable performance on the NIMs basis. Asset quality also looks very stable, so that also gives us comfort because we are discussing a lot about some of the personal loans. Well, the bank also have a relatively higher exposure to some of the sectors which is being discussed, like CV and other part of it. So asset quality is also looking quite stable out there, and overall credit costs also doing well within a limit. So in my view, this is a good result out there. We need to get the management commentary for the second half to take this forward.
What's it's an interesting name, Ashutosh, IndusInd, right? It's like the stock in waiting, because actually both IndusInd and Axis, because if you look at the larger ones, right? I mean, ICICI, the stock's done very well. SBI, maybe there will be a fundraising exercise at some point in the near future. HDFC Bank, I mean, they're going through the merger. So then you come to the second tier, I mean, which is IndusInd and Axis, and then a whole lot of small banks, which have also come up very nicely. Purely as a stock, where does it rate, IndusInd?
So I really rate it very good. Simple reason is that they are present in the segment where they have the pricing power, slightly higher, better pricing power than the many other segments where the banks are having relatively less competitive power. So what I see is that even in the current interest rate environment, their NIMs will be relatively better performing on the many other banks out there. So, and with better growth. So, commercial vehicle, microfinance, all these sectors are relatively high yielding and can really provide much better stability of the bank on the NII front out there. So, from that perspective, that is really expected to do quite well, and valuation is also quite reasonable. So, in my view, you are absolutely right that some of these banks which have not performed in the last few months out there may start participating from here onward.
Okay, Ashutosh, thank you very much for joining in. Wipro's Q2 numbers flashing for you on your screen. On the margin front, it looks to be in line with what we were anticipating. 16.1% is what the company has delivered on the margin front. EBIT has come in at 3,606. Just awaiting what the performance is on the top line in terms of dollar revenue and what the guidance is for the third quarter in a row. Right now, the only workable number for us is the margin, where the company has delivered flat margins on a quarter-on-quarter basis, and that's in line with what the street was anticipating. For Wipro, the margin pressure due to wage hikes will only kick in the next quarter. The street is anticipating that it's possible that this would be the third consecutive quarter of a revenue decline. Wipro, remember, gives you quarterly guidances on a quarter-on-quarter basis. And for Q2, the company had guided from -2% to +1% revenue growth. So that's the working range. CNBC-TV18 was anticipating that the top line would perhaps decline by close to about 0.81% thereabout. And the guidance for the next year is also going to be very crucial. Again, according to the CNBC-TV18 poll, it could be -2% to +1%. Still no word on
No sign of the press release fact sheet. Still waiting, Rima. But I think we have an analyst. Maybe we can get some first thoughts in on Wipro. Omkar Tangsale is with us. Omkar, thanks for joining in. Don't have the dollar revenue numbers just yet, but your thoughts on the rupee numbers and the margin numbers that are out?
Yeah, currently I don't have a number with me. Will you able to provide me with the same?
Yeah, 22,395. That is the IT services revenue number that has come through, and the EBIT margin stands at just about 16%, 16.1%.
Yeah, it's looked to be quite, below than our expectations. So it might be, continue to having the weaker outlook or the weaker execution as of now in terms of execution currently.
Omkar, if you could just, stay on. Hopefully, we'll have some more numbers to analyze on the other side of the break. Need to get into a very short break with the news that Innocent Bank has reported a good set of numbers. Bandhan Bank has been a disappointment, miss on, NII profits, a deterioration in the asset quality. Wipro, we're still awaiting more details. Margins appear to be in line, and Persistent is the fourth one which reported numbers. And then the revenue performance looks to be quite good, 3.1% on a quarter-on-quarter basis, ahead of consensus. Get into a break. We'll come back and analyze some more. Welcome back. It's been a busy last half an hour of trade. Just in case you missed it, IndusInd Bank has reported a good set of numbers. The NII has come in at 5,077 crore, ahead of our expectation by nearly 1.5%. Profits too have beaten our poll by nearly 6.5%. The company's asset quality is stable. The gross NPAs and the net NPAs have come in at an 11-quarter low. The street is going to like these numbers. The second one is Bandhan Bank, where it's a miss on street expectations on the NII and even on the profitability. Asset quality for Bandhan Bank has deteriorated quite significantly. So gross NPAs and net NPAs have gone up in double digits. So gross NPAs up 13% on a quarter-on-quarter basis, while net NPAs have gone up by 10.5%. And even in percentage terms, the gross NPA ratio stands well above 7% now. So Bandhan Bank has been a bit disappointing. The third number that we got was from Persistent System, where it's a good quarter. The company has reported a dollar revenue growth of 3.1%. Street expectations were for a revenue growth of 2.8%. But 3% is within the company's guided band. They've always said that our aspiration is to grow our top line between 3 to 5%. And despite all this macro uncertainty, they've managed to do that. A 3.1% top line revenue growth in dollar terms for Persistent. Not just that, the company has also reported its highest ever TCV, which has come in above $475 million. Those were the bookings in Q4. So Persistent looks to be a decent set of numbers. Wipro also reported numbers, and here we're awaiting some details. We have the margin performance. Margins for the company have come in at 16.1%, which is flat on a quarter-on-quarter basis. The rupee revenue has declined by 1.6%. This company's guidance was that it's possible revenues for the company will decline, but we're still awaiting what the performance is in constant currency. Well, with that, we're out of time on Closing Bell. Thank you very much for watching. On the other side, our coverage of the news continues.